All right, welcome everyone. Welcome to the trade findings and adjustments for a wild day in our market. It is the 24th of February. Holy Toledo is all I can say. Let me start off first with just looking at, I don't know. I don't even know where I should start with this. Let's take a look at yeah. Let me chart this over. I had a bunch of stuff set up today. And with that said, last night I was taking cat naps every 2 hours, checking on Europe Open, checking on the Asian lunch over there, and what a mess. Let's just put it that way, right? What a mess. Nikkei was down 1.81 after being down 3%. Shanghai was down 1.7%. Hang Seng down 3.21%. Europe, right now, DAX closed down 3.96%. The FTSE closed down 3.82%. The CAC down 3.83%. So, worldwide indexes are getting hit hard. And I'm just going to throw a couple of these in here again. DAX was a negative 3.96%. The FTSE was down a negative 3.88%. I'm just grabbing these off of the CNBC app. The CAC was down a negative 3.83. If we go to Asia, Nikkei 1.81 was down. The Shanghai was down 1.70%, and the Hang Seng was down negative 3.21%. So that's what we're up against. I mean, that's what we're looking at. It is a bugger. Bill, the Nasdaq was positive. It is positive again. What a wild ride for today. So let's just say this morning at the open, SPX was down to 2.54. And the Nasdaq, which is the Nasdaq composite, right, was down as much as 3.5. The Dow, I don't put a whole bunch of merit into. I just don't. It's not worth it. 35 stocks, right? Wow. Wow is all I'm going to say. What a wild ride we're on. So, anyone know what's my morning trading rule? Anyone know what my morning trading rule is? William, I know you know what it is. What is my morning trading rule? And Bill Branner, there you go. Perfect. Don't touch the accounts for the first hour. Why? Why would I say that? Why would I do that? What is the rush, or what is the, hey, you know what? You probably shouldn't do that. What is the push there on why you don't want to necessarily trade that first hour. I've got a Bill and a William, so I'm going to make sure I get separated. There you go. Perfect, William. And you know that because you're over in Great Britain, right? Because futures have to clear out in that first half hour, and economic reports finish usually within the first hour. So what does this equal? I want a confirmation, right? I want a confirmation on the trend. Confirmation on the trend. So let's go to accounts and how I'm looking at this in general. With that said, anyone know how much the S&P is down year to date? S&P 500 year to date. Sorry, you guys are typing stuff in and I'm going back and forth. 10 to 12%. I see 4%. 4%. William. 10.63 from Jeff Hall. I also see a 17.52. That's the Nasdaq. So let's go to the S&P. Let's refresh this so we have it as fresh as we can. Right now, this is probably delayed by 5 minutes. Year-to-date change. Right now, I see a 12.17. I was going to say 12.5. So we're looking at a 12.17 drop. Let's go to the Nasdaq. Nasdaq. It's even worse. US markets. Stock indexes. Nasdaq. Although great to see it up today. In fact, I was going to surprise you when you saw what else was up today. 16.57%. I just told you guys it was 17, but it's 16.9%. So that's what we're looking at for our major indexes year to date. 16.57. So we are new with E-Trade, not E-Trade, Schwab. And we pulled this up this morning. Found it pretty interesting. They're telling us, hey, year to date, total firm assets under management, we show 103% return. All that means is money got transferred over from 8.5 million for this group to the 17.8. We still have about 2.5 we're working on bringing over. More importantly, we're looking at capital appreciation, right? Here's the issue. On 17.841 million, it's lost 941. So I'm going to do some simple math for you. Well, I'm going to try to do some simple math for you, right? I'm going to take these numbers and we're going to calculate basically how the hell we're doing. That's the best way to say it, right? So accounts, and let's do a year to date. So as we're looking at accounts year to date, I need to take my 17,841,274. Need to add back in the 941,452. Which is where we started off with, which equals start of year at, and I'm going to take a calculator so I don't get it wrong, because I can get it wrong. 17,841, dang it. 17,841,274 plus 941,452. So start out at 18,782,726, right? Take our losses, 941,452 divided by that starting amount, 18,782,726. And let's see how we are doing. And it equals being down a negative 5.01. So against the S&P 500, 12.17 minus 5.01 equals point. Doing the math on my calculator again. We are up, or we're beating the market by 7.16%. And the question was, well, Kevin, what are you guys doing? I'm actually getting this from some companies, right? What are you guys doing? What is the secret sauce? And it's not that there is any secret sauce. It's just doing what we do over here at Hurley Investments. And I'm going to try to point some of these out to give you guys hopefully a little bit of confidence. And Jeff, I know you're new. Karam, I don't know if I'm saying your name correctly, but I know you're new. Howard, I got to take care of you. You're looking at having money come over. What are you guys doing? What are you seeing? And it's been somewhat fun. Apple today is down $97,232. We have some short calls now starting on some shares. They're making 1,774. 84,703 we're making up on long puts. A couple more shorts in here. Really, when you're taking a peek at things, and we've got some other people doing some trading on $97,000 down today on the stock, we're making up 84,700. Throw another one, that's 86,400. 88,000 of the 97 we're making up, which is roughly 90%. So right now we're making up 90% of this downward movement. And from there, we're like, hey, we're going to see what we got to do to make sure that we are protecting our investments. That's where we're looking at. Where are we at that point? As we kept going through, Boeing shares down 79, we're making up 7,000. Bank of America down 63,674, we're making up 58,180. And I'm going to keep going through to scroll through some of these so you get a general idea of why this has been so important. Baidu today, man, Baidu just awful. 107,000 down, making up 69,000. Earnings on Monday. Disney, another core holding, down 45, making up 31. Facebook, down 13,000, making up 12, and making up an additional 4 because we've added a couple more shares of long puts, a couple more contracts of long puts to make up more than the stock is losing. And that's where we're trying to head with accounts. With accounts, what we're doing and planning to do shortly, add additional long put contracts to make up more than the stock loses on the way down. And if you'll give me a second, I'm actually going to snap a picture of Facebook because that's a good example of where we're trying to move the total accounts. So the comment was made, well, Kevin, how would you do that on Apple? So let's go through a couple of these. Apple, if I brought up Apple, hit 182, but 175 was the hard point that it couldn't get over. 171 is the 50-day. We could do Apple a couple different ways. We could run, if we see it break the 200-day, I'd probably run an extra couple sets of 155 long puts. A 170 short call would be a great way from that point on down to most likely the 140 to 138 range would be how we would make up more than Apple's losing on the way down. And I would probably put half as many contracts on because we currently have some contracts in place. The comment was made here on Disney, another core holding, right? What would you guys do on Disney? Well, it's sitting at 44.49, 14 points down to the oversold. The lows are 129. We've got a good bounce back, but we're breaking the 50-day. A 147, or actually since it's trading at 144.67, we're probably going to add 145. 145, probably do March 25th, 4th week. Long puts, add an equal amount to share count for the run from 145 down to 130. On that $15, we might make up 2/3 of that movement on the way down, but we already have 150s in place and 160s in place. So we're still have that opportunity to make up that downward movement and to be prepared for downside runs farther. Let's just put it that way. Someone asked me here recently, how far do I think the market will go down? I spoke about it on Monday. You can find that at myhurleyinvestment.com. I think we probably have another 8% drop between now and March 18th, the March monthlies. If you click on the market commentary, I'll go through. I think I also maybe mentioned through it on the previous week. But it wouldn't surprise me All right. Boy, good thing I'm spelling so good today, huh? Wouldn't surprise me to see a 20% bear market correction. And the reason why is that will then make the market cheap. What are we up against? Well, currently, right? Market drags are Russia, which this could be a 2, 3, 4 week event. We don't know. The March 15th through 16th FOMC rate decision. They've got to do something. They'll probably only lower a quarter point, not a half. And then more importantly, end of March, tax selling, and April 15th, although I don't know if it's the 15th this year. Let's take a quick look. Could be April 15th. Taxes are due, and they will be higher than expected because of stimulus. It's just the way it's going to be. Taxes are definitely going to be higher because of that stimulus checks. So it's not like we don't have a little bit to worry about here. Look for short calls to be added. And someone made the comment, and I'm just going to quote in there, I don't want to cap, great spelling, sorry, Apple, Boeing, Baidu, Disney, Ford, Under Armour, Visa, JP Morgan. Those were the ones that saying, hey, I don't want to cap them with a short call. So let me ask this question. I'm really gonna kind of put you guys on the spot. If I had what I would call a short call, right? How many different directions can that position move? How many different positions can a short call move? And Bill and William and Mary, you're not allowed to answer because I know you guys already know. So Jeff says down, sideways, up slightly. So three, Jeff, 3 different ways that can move. Jeff says yes. Mary, I said you know, but you said four different ways it can move. Up, down, and sideways. So you have 4 different ways. Up, down, and sideways, and you said 4. So I said that because I want to trick you, right? The short call can stay right where it's at, and it cannot move at all. And I'm going to call that one of the ways it can move. That's probably not fair, but if you were to ask me, I would say, hey, that's one of the ways it can move. Now, it can obviously, you can move it out and at the same strike price, right? Should say out in time and at the same strike price. I'm going to highlight that because I'm going to use that. But if you can move it out in time, can't you also move it in time sometimes? Technically, you can move it in. Come on. Then you move it in time and up to a higher strike price. Technically, you can take it and move it in time and to a lower strike price. If we do the out in time and the same strike price, obviously you can see where I'm going to go with this one, right? Out in time and at a higher strike price. You can move it out in time and you can be at a lower strike price. And then in all honesty, you can move it up in strike, same price, or you can move it down in strike. Man alive, same price. So if you want to get really technical, you can have that short call move and or stay 9 different directions. Right now, it's not a bad thing to cap some of these positions. Right now, for some accounts, and we just started putting some caps on in certain things, those calls are making up an additional 1,700, an additional 600, an additional 915. Another puts here, 166. They're not necessarily a bad thing. Kevin, but it could cap Apple or it could cap positions that have gone down. You can take them off and possibly for a profit, right? Our mistake yesterday morning, we took off the Apple long puts for a profit. And I should say the Apple 170 long puts for a profit. And I'm just going to put slash closing cost of 710. Then 2 hours later, we added farther out in time and lower in strike price 160 long puts for like 650-ish. Made a couple dollars on the 170 down, took them off. We got head faked yesterday. Some people might call that a mistake. Or we made the best possible decision with the information we had at that time, and then changed our mind 2 hours later. It's what we did. We would look even a little bit better today if on Apple, if we hadn't have made that adjustment, that change. For the $5 between 170 and 165, I really think we only made $1.90. $1.90, we only made 40% down on that $5. It happens. We're not perfect. If anyone here thinks we're perfect, you've been lied to. We're not perfect. But I like where we're at right now. So let me ask you guys a question. How much longer is this going to last? Because, and someone asked the question, I haven't got you. How much cash do you have on hand? We were fully vested going into last year. We were sitting at about 12% cash. And right now, I think we're down to like 6.5% cash. But, man, I've got 84,000 to cash in, plus previous puts on Apple to add more shares to the 20,600 shares we have. Bank of America, I've got 58,000 cash. Plus the, are these the 48s? So let me see if these are the 48s. These are the 48s. Plus we have from 50 down to 48 that we also made $1 up there. So I'm sitting on a pretty big amount for Baidu to add more shares there, roughly 20%. We're sitting on cash on Baidu. We've got 69,000. We actually have over $450,000 cash that we're sitting on to add shares to Baidu. Someone was like, well, you should have added shares at 250. Why? We weren't at a bottom. Well, your puts expired, so you just add shares and add more puts. Why? We had no technical reason. I kind of giggle on that one, right? No technical reason Well, it was expiring. Technical analysis is the first dang thing you learn in education. If you're not at a support level, why are you buying a bullish position on a bearish moving stock? Wait till it finds some support. It should have done at 250, should have done at 200, should have done at 180, because that was a huge one. Well, Baidu right now is trading at 141. We're holding on money from 250, from 200. We're holding on a significant amount of cash because level 1 technical analysis has taught us you don't just randomly go buy 10% because you've got 10% profit or more in your puts. Find a support level. Jeff asked, how did I decide to close the puts yesterday? Apple was up, the market was up, and it reversed. It looked like it was going to shrug it off. I was following Apple last night and how it was purchased and overbought in secondary markets that it's registered in. Just so you know, a lot of people are like, man, what if Baidu gets delisted here? It gets a secondary registration. Well, do you not know Apple has like 10 different designations it's registered on? It's on the DAX, it's on the Nasdaq. I mean, you can trade Apple on like 4 or 5 different indexes through their index because it's registered in different countries. I'm not worried about Baidu getting a registration in Shanghai. Duly registered. Maybe even delisting here and only being registered there. That's not a big deal. So we got head faked yesterday. We took off the 170s for a slight profit. We saw it wasn't working the way we wanted to. The whole market turned, Jeff. So we added them back on. And really, kind of stupid, but let's be honest, right? Let's not hide it or fake it. I wonder, can I make this? Apple 3-day yesterday. Started, opened up. And right about there, 165, that's not Apple, that is, it looks like Apple. Let's get Apple in here. Thank you, William. William's like, that's not Apple. Apple chart will look similar to it. There you go. Might have been even a little bit quicker. So we probably took them off right here-ish at the start and added them back on right there. And we got head faked and we felt like idiots from 165 down to 162.50. Then we felt smart. I was like, you know what? Roll them down. Let's add them back on. Kevin, why would you add them back on after you took them off? What were you seeing? What were you doing? Why? You know, what's the rationale? Right here. We're bearish. We weren't touching an overbought. We jumped the gun. We still saw it could get down to this range or this range or this range. So we said, you know what? Put them back on. We guessed wrong. We put them back on. And I think it's Jeff that's asking that question. So we saw we weren't overbought. We just were like, you know what? Got to be smarter. pretty interesting as we put in some of our extra pivot points and then Williams percent R. This is kind of why we helped make our mistake. We use our couple other we saw big money, the medium stochastics, the Williams percent R. We saw that it was oversold. So because it was oversold, we were thinking, hey, big money's going to start to come in. It panicked us, off we went. Short calls, we'd feel comfortable with short calls at 170 with over $1.36 a credit or 175. That's where we'd want those short calls at to cap Apple, knowing we can always take them off if we need to. Any other questions you guys have? Really, that's all I have. Oh, that's not all I have for you today. One other thing that we're messing with that I found rather exciting, but what else are we gonna do, Kevin? We got to do better. What else can you do to make up some things on the downside? I'm primarily saying that for Jeff Schaffner, right? Because I know Jeff's asking that in his head right now. We're just testing it, but when you see big movements on some of these stocks, come on. Yeah, I look good. Come on, catch up. We were running a strangle straddle. And we're probably going to be putting these in all accounts. We put it on yesterday. This is a trial and error. 2 contracts, March 422 puts, 423 calls. Yesterday, at the end of the day, we're finishing up with a 423.12 price. This morning, it's not spectacular, but the 2 positions together are up 139. If we had just used the puts by themselves, we could have made an extra $692. We did calls because we weren't sure it was going to bounce up and down. It's a total uncertainty, don't know what I'm doing trade, a strangle. We're up today $140 on it. This was the one the S&P was down roughly 0.82%. Right now, the S&P is down 1.06, so this probably is getting a little bit better. Maybe we're making $150, but it's helping us understand where SPY puts are moving and where we can add some into accounts to start to make up additional downside movement. Of course, we tested on our own accounts. We're like, hey, volatility's kicking up. We looked at the VIX. It's, our thought process was, where could we find ways to pick up a better return for you guys? So at midnight last night, as Keeve and I were talking, quick little pull on the VIX. And we basically feel like the VIX can get back up to that highs of the year of 38.9 that it was in January. Being held off at 37.07, that is a resistance level. So this might be a one-day trade. We might take that strangle straddle off, reposition it, and where we reposition it, maybe at the end of the day, we'll take it off and we'll do, going back to the SPYs, do again 417, so maybe we'll do a 418, 419. Just to see if we can be picking up some funds here. And again, if we prove it to ourselves in our accounts, we'll start doing it in your accounts. That's the short answer right there. All right, any other questions you guys have? Any other questions I can bring out to your answer for you? Mary, what about accounts with long call positions? So someone's asked in the past, why haven't you added, puts to long call positions? Well, we might. Fact of the matter is we might. But unfortunately, adding puts to long call positions, mathematically, historically, back testing, it's always been better to dollar cost average. To spend that money instead of losing on it if it turns on you, just to dollar cost average and lower your cost basis that way. The benefit of doing that, it doesn't nearly have to move as far. If you're dollar cost averaging on something and you're dollar cost averaging 2 or 3 times the amount for a tenth of the cost, it has to move 20% and you're profitable again. Back them out, get out of them, book a profit, go on to the next one. So, Mary, that's why we don't technically do that on the long puts. Add long puts to long calls or lead positions. It's not cost effective. Back testing, historically, it's not a profitable, especially over the last 10, 12 years, it hasn't been a profitable way to run lead positions. Any other questions? If not, guys, have a great afternoon. I'll add a couple more shots in here so that you guys will see it, and I will get this posted immediately. But hopefully that answers your question on not capping a position, understanding all the different ways that options can move. Hopefully you can see what we are doing to make up that downward movement. And again, this is the drudge of it. I mean, this is the part of investing that sucks. We're going to be down for a bit. We're going to add the shares. You're going to look better as we make a run higher. All right, I've got call set up for 11 and 12. Guys, you take care. Pleasure having you. And I will talk to you soon. Bye-bye.